Hello, everyone, and welcome back to the Common Sense Crypto channel. As with you always, this is Rich doing another video today on XRP. So I hope you're all having a wonderful day today, wherever you are in this great world. We're going to talk about XRP. And I got to start with this. U.S. Treasury just bought back $12.5 billion of their own debt, the largest Treasury buyback in history. We're going to see more of this. Other countries no longer want the U.S. debt, and eventually they're going to tokenize the debt as well. But even our debt benefits utility-driven cryptocurrencies. Crypto author says, when the Fed brings water, XRP brings fire. Paul Barron said that. The U.S. Federal Reserve's decision to end quantitative tightening is already affecting crypto markets, including XRP and Bitcoin. They're talking about the latest move up on Bitcoin. But the liquidity era favors utility tokens. Community voices argue that the coming liquidity wave could amplify tokens with real-world use cases. XRP commenter X-Finance Bull asserted that as liquidity returns, XRP is positioned to do what it was built for, move money at scale. He stressed that unlike previous cycles, driven mainly by hype, XRP now benefits from real-time settlement utility, institutional integrations, and ETFs. He concluded that when liquidity floods back in, it exposes which assets are truly ready for scale, and XRP is one of them. I said the same thing for a long time now. XRP could strengthen the US dollar. It could move it around the world in a matter of seconds for less than a penny. And that would be great. It could also take the US dollar into areas that the US dollar has never gone before. Certain third world countries, banking the unbanked. It's going to be everywhere at some point. But right now, Ripple is still laying the rails for that to happen. But even in its current form, XRP could strengthen the US dollar. It doesn't even have to be in digital form. I would pay money to watch a side-by-side comparison of the MicroStrategy business model and the Ripple business model. It's like comparing a Pinto with debt to a Rolls-Royce with no debt. I thought that was a great post. And it doesn't take a Wharton graduate to figure out, but I'd love to hear the opinion of one Dom Kwok. So you see the difference between MicroStrategy and Ripple Labs. And the comparison is absolutely astonishing. First of all, you look at what MicroStrategy is backed by. It's backed by Bitcoin holdings and convertible notes, where Ripple Labs has zero debt and it brings in money every single day. That's why Ripple's balance sheet is so incredible. MicroStrategy, it just looks like a Ponzi scheme to me, but that's just me. Crypto M&A deals hit an all-time high in 2025, blowing past $8.6 billion. So these are mergers and acquisitions, and you see Ripple is high up on the list. So they have Ripple Hidden Road, $1.25 billion. Ripple acquiring G Treasury for $1 billion. Ripple acquiring Rail for $0.2 billion. But this year was absolutely incredible for acquisitions, even outside of Ripple, and you see the list right there. I think we're going to see more acquisitions heading into next year as well. I know Brad has even mentioned that they plan to do more acquisitions as well. So 2026 already looks very bullish for Ripple and XRP. He wasn't wrong. He was covering the fact that they are heavily involved. Even now, he is lying, or maybe it's just the NDAs. Take a listen to what Larry Fink says here.
Called crypto an index for money laundering. BlackRock
and thieves.
and thieves.
Yes.
money laundering and thieves. Right. You now have the biggest Bitcoin ETF. So what happened here?
I have very strong views, but that doesn't mean I'm not wrong. By having strong views, you have to test yourself and ask yourself. And, in my role, I see, thousands of clients a year. I have, governmental leaders, and we have these conversations, and my thought process always evolves. And this is a very glaring public example of a big shift in my opinion.
Honestly, I think Larry Fink still thinks the same way about Bitcoin. But here's the thing. His customers wanted exposure to crypto, and that's what he gave them through those ETFs. But it's all about money for BlackRock. Now, if you start to look deeper, BlackRock, in my opinion, is a shell company for the elites. Ripple is also well positioned with the elites. I do believe there is an NDA in between BlackRock and Ripple. And I think something so much bigger is building in the background. That's why there's no BlackRock XRP ETF yet. Maybe it comes later, maybe it doesn't. But one thing I know for sure, BlackRock has XRP on their balance sheet. Nobody can convince me otherwise. Bloomberg senior research analyst James Seifert says outflows from crypto ETFs are being over-exaggerated. Take a listen.
Look at the headline number and you look at outflows from the Bitcoin ETFs and the Ethereum ETFs, and you're like, oh, tons of money is coming out. But in the grand scheme of things, it's like a couple percentage points of like the money that has gone in over the last 18 months. So yes, the numbers are big, but that's because the numbers have been absolutely massive that went into this product. So the Ethereum ETFs have had about 2.5 billion of outflows. That's the one I'm going to look at real closely here. And one of the things I just want to point out is, again, the flows are small as far as when you look back, but 2.5 billion is a big number. But a huge part of this has to do with something called the basis trade. And a lot of hedge funds love this. Some people are probably used to hearing it more on the treasury side of things. But what you do is you basically sell the month contract, the futures contract for the front month or the second month, and you buy the spot at the same time. And what this does is it's a delta neutral position you can earn in like basically a risk-free rate. I won't say completely risk-free because there are issues, but that yield has gone up to 20% annualized at various different times. Lately, it's been around 10%. Now it's below 5%. We just talked about it. There's going to be hundreds of crypto ETFs launched, different variations, different leverage, different yield plays, you name it. But the other part of it is that we call it manufactured yield, which is kind of similar to what we were just mentioning. It's like these companies are using derivatives to give you leverage or extreme yield, like sometimes north of 80% by selling like in the money call options on really volatile stocks. So these manufactured yield, and we call them boomer candy, these products where they're going to give you protection on the downside, maybe cap your upside in some ways. Think covered call products. There's these products called buffer products. That is still going huge. It's growing extremely quickly. But at the end of the day, it's active ETFs. Active ETFs are here. They are growing extremely quickly. All the legacy asset managers that you know by name are now launching actively managed ETFs. We actually had some news today that Goldman Sachs is buying one of those companies that started those buffer products, those boomer candy products I was just talking about. So Goldman Sachs is jumping into the ring in a big way. They're still going to be, they'll be a top 20 issuer. They're already a top 20 issuer. We think they're going to go from like 17th right now to 15th with that app.
I wanted to play most of that clip because when he was talking about 80% yield, could you imagine the risk that comes with that? But in the beginning of that clip, also, what he tried to do was downplay the outflows from the Bitcoin and Ethereum ETFs. I honestly believe the money shifting into XRP ETFs. Some of it, I'm sure some is going into the Solana ETFs, the HBAR ETFs, and so on. They don't like to admit that the institutions are now looking past Bitcoin and Ethereum, but that is what's actually happening. Bitcoin got first mover advantage, and people want new exposure. They want to have something beyond Bitcoin. They also know what XRP is capable of, so why not get invested in it before it actually really amps up in price? but they always try to downplay outflows. And at some point in the future, I'm sure we'll see outflows on the XRP ETFs as well. But I don't think it's going to be as massive as what we're seeing with Ethereum and Bitcoin. Jim Rickard says the next real crash will come from stablecoins. He's not wrong. Tether isn't too big to fail. It's too big to expose. Protect it only as long as it serves the system. Once its usefulness ends, it becomes the scapegoat for the next financial reset. Take a listen to this.
So my concern would be that, well, not just concern, just from experience, this will happen. The market will freeze up, exactly what happened in money markets and commercial paper in 2008. The Fed will be very reluctant to bail it out. I mean, the Fed gets criticized when they bail out money market funds, because they're not banks. I mean, they bailing out banks is kind of their area of responsibility, but not money market funds. But they did bail out money market funds. Would they bail out the crypto equivalent of a money market fund? I'm not so sure. They might just let it fail as kind of a lesson. And then there you get into the issue of contagion, where a failure in one market very quickly leads to failures in other markets. Because if I'm the crypto holder, the stablecoin holder, and I redeem and I say, give me my money back, and you say, sorry, I can't, we're having difficulties right now.
They're not going to bail out Tether. I think the U.S. is using Tether right now. They're taking up a lot of those T-bills and so on. But when they no longer need it, they'll just let it fail. And when it fails, it's going to pull Bitcoin down with it. It's going to pull the entire crypto space down with it. But anything that's not propped up by Tether, it's going to bounce back very quick. Bitcoin, it's going to take a long period of time to bounce back if Tether ever crashes. And honestly, I just think it's a ticking time bomb. It's going to happen. They don't have an audit. Plus, they're offshore. They wanted to create a whole new stablecoin just for the United States. That alone tells you all you need to know. Plus, they can't pass MiCA regulations. So every country around the world is on the verge of putting stablecoin regulations in place. How does Tether stay relevant? I think we are very close to the beginning of the end for Tether. And former SEC Chair Gary Gensler says that every crypto asset except Bitcoin is highly risky and speculative. Take a listen to this Bitcoin maxi right here.
I think it's a risk asset, and the American public and the worldwide public has been fascinated with cryptocurrencies. But it's a highly speculative, volatile asset. And putting aside Bitcoin for a minute, all the thousands of other tokens, not the stable coins that are backed by US dollars, but all the thousands of other tokens, you have to ask yourself, what's the fundamentals? What's underlying it? You don't get a dividend, you don't get usual returns. And so the investing public just needs to be aware of those risks in this highly volatile space.
Here's the problem, and that my anger with Gary Gensler aside, my thoughts on this are like this. Gary is also following the Bitcoin marketing lead. In other words, he's promoting Bitcoin as being better than all the other cryptocurrencies. He knows for a fact what Ripple and XRP is capable of. And the fact that he's pushing retail into Bitcoin instead of telling the truth about XRP and most likely every other cryptocurrency that he knows about, like XLM, XDC, and so on, that's worse than anything. That's why I hate the mainstream media news. They keep people out of assets that aren't gambling. Instead, they just want to herd everyone into Bitcoin and ETH. If you don't have Tom Lee on the mainstream media news promoting Ethereum, you have Michael Saylor on the mainstream media news promoting Bitcoin. Why not promote something that solves a real world problem? Because nobody wants you holding XRP. They don't want you buying XRP. They want you buying the distraction. They don't want you buying the disruption. And that's what XRP is. When everything comes crashing down, XRP is going to rise like the phoenix from the ashes. But Gary Gensler, he's on that same, hype train with Bitcoin. And I'm sure somebody's paying him to say what he just said. And that's been the narrative this entire time. And it's not going to end until the rise of the new financial system. They're going to keep herding retail in, using them as exit liquidity as long as they can. But eventually, this will all come to an end. Wait until the day happens where XRP flips Bitcoin. I am telling you, you will not hear about crypto that entire day on the mainstream media news, because that ends all of it. That ends the entire belief system in Bitcoin. And I'm telling you, it is coming. You could see it already loading. As technology continues to move forward, it's making Bitcoin less and less relevant. And until it all happens, stay patient, stay positive, and let's get rich together. With that said, I'm going to wrap up this video. I want to thank you all for watching. I appreciate all of you. I'll see you in the next one. Have a great night.